At the last portion of the day at 1:30, if you're bearish, you can use the opening price at 1:30. Treat that the same way I teach you to use it on the midnight candle in New York, and at 8:30 and at 9:30. If you're bearish, the market rallies above that opening price, goes into a premium array, as we see here. You can expect this to do what? Sell off, and treat this whole price movement the same way I teach Power 3 for a daily chart. You can treat the same idea of Power 3 within a session. So everything is fractal. The algorithm sees it just like this. Opening price, this is a Judas swing. It's all manipulation up into a premium. Trades lower. Rallies back to the short-term premium array. Trades lower. Fair value gap, trades up until here. This low being taken out here, this is model 2022 right here. Now think, I teach you to trade this at the 9:30 opening, right? Everything is the same. We're just applying it to the market in small little segments the same way my algorithm does. So the logic the algorithm's using is it's using the protraction from this opening price when it's bearish and it still has undelivered targets down here. It's running up, creating a short-term overbought. We don't need an indicator to do that. Trades down, one more time up into a fair value gap, and then because of that, it creates that short-term low. It breaks below that short-term low. Fair value gap, your eye goes right there. From this high down to that low, midpoint equilibrium. So you're looking for a fair value gap at or above equilibrium. Where is it at? There. Trades up until here perfectly. Breaks down. Here's a wick. Where's it trading up to? Midpoint. Right there. There's another sell. So you can sell here. Pyramid. Wait for sell side to be broken. There. We're partial, which is the top of the fair value gap on the daily chart. Trades down into midpoint, consequent encroachment. That's a partial. And then as it hits here, you don't want to use the low of a fair value gap for your target or partials. You always want to come off of that a little bit. Anywhere between a half a point to a full point, you'll always see me try to do that at the very minimum. Anything more would be, if I have a lot more targets below, which there wasn't below this for me, I would not try to be fancy dancing a perfect exit at the low tick. It's just, there's no need for that. So if you were looking for 39.43 3/4, there's nothing wrong with 39.44 1/4, 39.44 1/2, and be content with if it spikes down to your level. Who cares? You need to have time and offering for liquidity to pair with your limit order, because the market's not sitting down there and hanging out at 39.43 3/4 very long. This is a 1 minute candle. It only goes down there, bam, for 1 second, and it's off of it. So, a little something extra, no extra charge.